All right, so check this out. So I'm going to give like a little brief overview on how to scalp pivots. So anytime I'm putting in a pivot where I'm giving like, the call out amount. So for example, yesterday I gave you 117.19, so $117.19 on AMD. How I got that number is taking a look at the daily chart first of all, right? So the daily chart, what I want to see is no supply ahead, meaning I don't want to see a ton of all these squiggly lines on top of my price, right? Because this is all supply, so supply and demand. So all of these moving averages, I'd like to see them underneath or maybe one or two on top, but like a lot on top to where like I know I have 2 points, 3 points, 4 points worth of room. So if it confirms that area, I know that it has room to run into the next supply, because the whole theory is that stocks are going to trade from supply to supply and demand to demand, meaning that when they break above a moving average, that typically more times than not, these stocks are going to go and trade into the next supply zone. And either at the next supply zone, they're going to be rejected or they're going to confirm and move higher. Just like when stocks break down below the moving averages, they're going to trade to the next demand zone. So demand to demand, supply to supply. Obviously, in this case on AMD, we have no supply ahead. This is the daily chart. So how I got 117.19, you can see here on the 18th, which is Monday, and yesterday, Tuesday, we touched 117.18, 117.19 two times, right? No supply ahead. So I'm going to draw my trend line here, 117.19. If AMD breaks this price, I'm going to get into the trade, and I'm going to use it as a scalp. So trip out, because I'm going to switch over to the 5-minute time frame, and I'm just going to use the 20 moving average on the 5-minute time frame. So it doesn't look like this was a big move, but it did give a pop, and it gave a pop almost 1 point or a little bit over 1 point. And typically when I scale, I'm looking for, if I go in 3, 4, 5 contracts, I'm looking for 1, 2 points fast. So if I get that 1 point and my contracts are up 20, 30, 40%, I'm just going to sell regardless. Unless the stock keeps running, then obviously I'm just going to monitor it closely, let it run for as long as possible until I see some red candles or I see the market get weak. So if I go to, the 5-minute time frame, right? So the 5-minute time frame. Okay, so 5-minute time frame. Here's that price of 117.19. The trend line is still here. So you're going to trip out on this. Okay, so if you just take a quick look, right? Take a quick look at where the resistance is. The resistance is at 117.19 because we touched it 1 time, we touched it 2 times, we have no supply ahead. If we break this, I'm looking to break this, and look at where the 5-minute candle stopped, almost to a T. Here's a 5-minute candle, 6:30 in the morning. Obviously, we know the bell's going to ring for us here on the Pacific Standard Time. 6:20, this runs, right? So 6:25 is pre-market in this little baby candle here. 6:30, the bell opens. This thing shoots up from 116.20 all the way to what? 117.19, almost exactly. Why did it stop there? Because we had supply. How did we have supply? 2 previous candles top wicks are at 117.19. So you can kind of get the idea as to why it stopped there. It stopped there in the first 5 minutes. So where did I take this play? I'm looking for the break of 117.19, right? So at 6:35, 5 minutes after the market opens, we confirm 117.19. I bought 3 contracts of AMD. As soon as I bought the 3 contracts, it started to run. Came up to a price of 118.03. Next candle opens up, starts to come down, right? Anytime you get these wicks, this means that the price opened up here, traveled down, and then bulls started to buy the price back up and it started to increase. So this is all within a 5-minute time frame. Opens up, travels down. So where is the stop going to be? Stop is always going to be entry candles, low price. So this is my stop. Stop's going to be here. Okay. So if I'm going to get into this candle, My stop is going to be at the entry candle's low. So if this candle was to come down, 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 I would have been stopped out at 117 even. If I got in around 117.20, 117 was my stop. I'm only risking 20 cents on the trade. Okay. Cup of coffee, nothing. If the trade fails, so fucking what? It fails and I'm just out and I look for the next setup. Price came down. Obviously, you know, once you see this, once you get into a play like this, okay, once you get into a play like this and it runs up almost $1, then starts to come down, this is where FOMO, fear, anxiety can start to play tricks on you, because then you're thinking, I got in, price went up, now it's starting to drop. You could sell here when the move could continue, so forth and so forth. Anyways, traveled up, closed here, next candle open up, went all the way to a price of 118.30. As soon as it hit 117 or 118.20, 118.25, I just sold out here. Normally, you're never going to top tick the sell, just because this could have continued to gone higher or it can continue to come lower. You know, you don't know that. I don't know that. Nobody knows that. But I know that when I get into a scalp, especially on the 5-minute time frame, I'm looking for $1 to $2. If I can get that in 5-10 minutes, my contracts go up 20-30%. I could care less how much more that it runs up. All I'm looking for is a point. If I can get a point and my contracts move 20-30%, I'm going to sell no matter what. I'm not waiting to see how high it can go, unless this candle opens up and it just continues to go green, go green, go green, go green, go green. Even then, I'm looking to try to sell on the way up. And then you just sell here. Plain and simple. Plain and simple. That's how you use the pivot to scalp. Again, this is a scalp, 5, 10, 15 minutes. The only time you're going to go into a trade thinking that it's a scalp and you're going to hold longer, let's say you hold an hour, you hold 2 hours, you hold 3 hours, that's just because the stock is continuing to move higher and higher and higher and higher and higher and higher and higher. And all you're doing during that process when you're managing the trade is, now if we entered in here, this is our stop. We're then going to move our stop to this low here, right? Move our stop to that low. Let's say this red candle here that I have my mouse over, if this, let's say it ends here, then I would put my stop at the next entry or at the next candle's low, if that makes sense. Okay. I'm going to show you how you could have used this to the downside. I'll make another video on how you can use this to the downside. Let's take a look at Square really quick. Square. That was the other play that I gave you. So if we look at Square, and we go to the opening bell here, let's see what price I gave you for Square. 257 break. So if I go back to the big chart, Square 257 break. 257 break. Yesterday's high price on the wick, okay, this is yesterday's candle. Yesterday's high price at the wick was 257, 256.88, 257. So I'm going to draw a trend line at 257. My next supply, right? My next resistance is this blue line here, which is a linear regression channel 50. That is at 262.85. So from 257 to 260 to 262 is 5 points worth of room, 5.5 points worth of room. So for me, there's enough room in this trade to scalp 1 point, 2 points. If it confirms 257. So if we go back to the 5-minute chart, because we're looking to scalp, and I go to Square, right? Here's the 257 mark. Where's 630? 630 is here. So in this case on Square, we opened up higher than 257. So how do you scalp when you gap up over the pivot? So if this is 620 and you're watching the chart 10 minutes before the market opens and we confirm this pivot pre-market, as soon as we confirm this, this becomes your new entry. Okay. So this becomes your new entry. So you're looking to confirm 257.79. Market opens up 630. Okay, so on 630, market opens up, immediately starts to go higher. You put your money into this candle as soon as it breaks above your new entry price. If the pivot is 257, However, it breaks 257, which is your pivot pre-market, then wherever that candle stopped at, that becomes your new entry. That new entry price was 257.79. Next candle at 6:25 in the morning, 5 minutes before the bell opens, doesn't really do anything. And then at 6:30, when the market opens, right away confirms $257.80. You're going to put your money into that candle. What is your stop price going to be? It's going to be the candle's low price. So look at how much risk you're giving yourself. If we're looking for 257.80 to break, that's where we're going to put our money. 257.70 is our stop. So if at 6:30 this opens up, goes up 30, 40 cents, and then comes back down and goes below 257.70, which is only 10 cents worth of risk, you stop out. So what? Move on, look for another trade. Okay. Comes up, goes up 1 point, 258, goes up 2 points, 259, goes up 3 points, 260. What am I looking for on a scalp? 1 to 2 points. I'm looking for my contracts to move 20, 30, 40%, and I'm going to take my profits. As soon as you put your money into this break, once the market opens and this starts to go up 1 point, start thinking about selling. It's got good momentum. You see the market is driving higher, goes up $1.50, $2, sell. Just sell. I guarantee you 100% that those contracts are going to be up 20%. They're going to be up 30%, depending on what strike price you bought. If you went in the money or right at the money, could be up 50%, 60%. This is within a matter of 5 minutes. You're in, you're out, you're done. Plain and simple. That's how you play a pivot that gaps over that entry price pre-market. Okay, 257 was the pivot, cleared that out 10 minutes before the bell. That becomes your new entry. 625 doesn't do shit. 630 market opens, confirms 257.79, and you're going to put your money into this candle. You're going to use that candle's low as your stop. Stops you out. So what? If it rides up 1 point, 2 points, think about profit. Your contracts are up 20%, 30%, 40%, sell. You don't know that it's going to go to 260. You don't know if it's going to go to 265. You don't know if it's going to come up 1 point and go back down, hit your stop. Just take your money. That's how you play the pivots for scalping. Okay. So you're trying to be in 5, 10, 15, 20, 30 minutes max. You're not trying to sit in this trade all day. I can show you other ways for bigger moves or a longer move, but these are scalps. So we're looking to just get in as soon as it confirms, use our entry candles low as our stop. We're looking for 1 point, 2 points fast.